Brent, and I'm not saying the markets can't fall more. They could fall another 10%. They could stay down for years. I have no idea, but I'm just trying to put the current market in some sort of context for investors, because the amount of hand-wringing over the last couple of percent is unlike really anything I don't think I've seen in 20 years.
Yeah, I agree with you. I think investors have become used to markets that go straight up into the right more so.
Yeah, it's like stocks went down. What do you mean stocks go down? That's why you get paid to own stocks, because they can and they will go down for a variety of reasons. That's why the return is supposed to be more than the bond market.
Absolutely. There's a risk premium in owning them, and not everyone can own them. And unfortunately, people who can own them find out at the wrong time. They puke them up, to which the gains that they give up pass on to someone else who can actually own them. So the first thing we always encourage people to do is do what you're doing, which is think longer term. I do think that S&P 500 chart maybe hides some of the damage that's gone on beneath the surface and some of the leaders that people had concentrated in. And that's where, to me, the S&P 500 still provides opportunities, but there are bigger opportunities outside of the S&P 500 that haven't performed well for years that will possibly do so in the future because they are cheaper, and there is kind of a catalyst change going on right now in the environment, which this tariffs and these possible tariffs kind of weave into.
You know, Brent, Brian's so right. And when you watch anyone like Warren Buffett building their wealth over time, it's, build the wealth, stay in the market, just ignore the headline, But I'm always afraid that I'm going to get in, or that it's going to be when it's like the lost decade, right? And every time someone comes on and says, we see permanently lower returns from here, 4% a year, count on it. I go, I try to just ignore them, but it's happened before. Maybe it could happen again.
Sure, absolutely. And that's why you diversify. I mean, that lost decade that everybody refers to is not lost universally across asset classes. And so I obviously lived through 2000 to 2007, 2008. And during the first part of that, international stocks did much better. Emerging markets did better. Those were the laggards in the prior economic cycle. And so if you think about 1999, it was much like it was today, where people wanted to own tech stocks. They wanted to concentrate in a few stocks that were doing well at the end of that. And what you saw over the next 5, 6, 7 years was that the market broadened back out to include small and mid-cap stocks, which did very well. It broadened out to include emerging market stocks, international developed. And that's the path that I think is most likely going forward, where you're going to see some of those laggards that haven't done well but are cheap. They now have a catalyst, which I think is in Europe, for example, increased spending on defense. It may be possibly an end to a war. It may be the dollar weakening. You think about the U.S., small and mid-cap stocks haven't done well for the past couple of years. They've been impacted by the economy, which has been bifurcated.
Yeah, but what if I was talking about, and I don't remember it, to be honest, but I was talking about the 70s, and if it's one of these situations where we have kind of sticky inflation and a little bit of this kind of like misery feeling out there, and, to your point, small caps and some of these other things, like they just keep chronically underperforming. We have high interest rates. We didn't have that in the early, probably about where they were in the early 2000s. Didn't have that in the 2010s. So what about that analogy?
Look, I think the 70s are an interesting analogy. I was actually born in the 70s, 1973 to be exact, which was when we actually had a bear market. So I suppose I'm a bear market baby, which probably makes me a bit more cautious in my approach. But to me, there are still opportunities back then to invest. One of the things that I think people do wrong back then is they look at the S&P 500 price return and not total return. Certainly, there were opportunities across the board. If you think about the 80s, that's when international development did very well, kind of buffeted by Japan actually entering the market. And so I think there are lots of opportunities that are out there. And so when you hear the word lost decade, to me, that doesn't mean across all asset classes. And there are opportunities today, even though I do think there are heightened valuations in some parts of the market. There are other parts that I think are primed to do well in the future. And that's why we encourage, going back to your opening comment, Brian, no one knows for certain what's going to happen. Diversification is admitting that. And that's where I think the anecdote that people are looking for, or antidote that people are looking for the uncertainty that I think is going to exist, is not by selling out of the market. It's by staying diversified. If you saw the market move into cash, you to me are telling me that you know exactly what's going to happen, which no one does.